Hey, we're halfway through 2025. Has the global economy surprised you so far this year? Has it gone as expected? Is it anything caught you off guard with your economist little cap on?
Yeah, that's a really, really good question. I think from the point of view of the economy, things are sort of playing out the way we thought. But financial markets, I think, have been more surprising. Certainly when Trump announced his tariff proposals on so-called Liberation Day, and the more he spoke, the further down markets went. I think I didn't expect markets to turn around quite that quickly. I certainly didn't expect Donald Trump to change his mind about tariffs quite that quickly, and certainly the speed of the turnaround in share markets, I think, caught most people by surprise. And certainly we did see a number of people very, very concerned during that time, but that concern pretty quickly evaporated when markets just went on a bit of a tear, and so we ended up, finishing the financial year very strongly. And I think that's got to be counted as the biggest surprise. The tariffs are not really a surprise. We kind of expected that Donald Trump would follow through on his tariff proposals. We didn't obviously have any idea what the exact nature of them would be, but we knew they'd be bad. And it's still not clear just how bad they're going to be. There's still an awful lot of uncertainty about what tariffs are going to apply to which countries. There's still negotiations going on. So at time of recording, we really don't have any clarity yet about what US trade policy looks like.
We just do know at the time of recording, just over the last 12 hours, Taco Trump, and I'll tell everyone what that means if they're not online and all that like I am. Well, it's Trump always chickens out. That's the saying that the kids are saying online. But they've kicked the tariff extension down the road till 1st of August to give more time for countries to negotiate. There was a few hard changes of some other countries, but broadly, it's a bit of a non-event, and markets didn't really react, like maybe down 0.7 or 8 overnight in the US.
Yeah, it's certainly nothing like the Liberation Day sell-off. So I think the S&P was, as I said, down about 1% or less. So it wasn't as bad as the reaction we've seen previously. But there's still just no clarity. I mean, this idea that you could deliver 90 trade agreements in 90 days was always a bit of a furphy. And also a trade agreement is not a two-page flyer. I think there's also this idea that somehow, a two-page fact sheet somehow counts as a trade agreement. That's just not the way trade works. So he may well come up with a bunch of so-called agreements over the coming weeks, but they're not really going to contain a hell of a lot of detail. Because you can't do it because you can't really go through the detail that trade agreements require in the time that he's allowed, really.
And I think the reading that I'm reading, or the data or stuff that I consume as a person out in life, probably like AFR stuff, maybe some US stuff, but particularly as Australia stands, we've still got this imposed 10% baseline tariff. If you are new to this podcast and all that, maybe just a quick recap of how a tariff works.
Yeah, so a tariff is a tax on imports. And so basically if you're worried about the amount of imports coming into your economy, one way you can address that is you can impose a tax on imports so that it increases the price of imports relative to, say, domestically produced substitutes. So in theory, you should reduce the demand for imports, make your domestic products more attractive. What it also means is the consumers pay that tax. So the end customer pays the tax. The foreign country that supplies the imports, they don't pay the tax. It's basically a tax on consumers at the end of the day. Yeah,
awesome. A couple of things that people might, want to know or discuss. Anytime we talk about, we've got an economist coming on, there's a big difference between the economy and Economics 101 and actual financial markets.
Very much
the share market
yeah.
isn't the economy.
Yeah, that's a good way. That's a really interesting.
Or how do they do they correlate? Is there
not really? Right. The way I tend to think about it is that the share market, or at least the businesses that comprise the share market, some of those businesses certainly do reflect, and the performance of those businesses is absolutely impacted by what's happening in the economy, and that's great. But other businesses, in the case of Australia, say, for example, our big mining companies, they're much more influenced by what's happening in the global economy and particularly what's happening in China, for example. So you could have a situation where the Australian economy might be quite weak, but the major resource companies that are big players on our share market could actually still be doing very, very well. The other thing too is lags. It's also important to remember that financial markets are inherently forward-looking. They're more forward-looking than any economist or analyst or journalist or any piece of economic data out there. So, markets are interested not on what's happened last week or last month. They're more interested in what they think is going to happen in the future. And in particular, what's going to happen to corporate profits in the future. That's fundamentally what they're on about.
Yeah, and I think like this whole one of the biggest issues that I see because the share market is basically companies that are listed that the public can buy. If there is someone in an office like the president or the prime minister or any political party, and they start moving things around and moving goalposts like we are seeing from the White House, that can really impact confidence, which means if I'm a business owner, well, I might want to just hold my cash a little bit more and not invest because the goalposts might change.
Yeah, very much so. And I think the best way to think about the US at the minute and what the impact of this trade uncertainty is doing to the economy is that, if I'm a business owner and I need to allocate capital, I need to make long-term capital spending decisions. And as part of that, I need to make decisions about, am I going to produce stuff in my own economy, or am I going to source imports? Am I going to get stuff produced for me offshore, or am I going to get stuff produced for me domestically? And in order to make those decisions, I need to know what the rules of the game are when it comes to trade. And right now, it's not clear what the rules of the game are. And so consequently, there is a risk, even though the US economy is actually holding up remarkably well so far, there is a risk that this kind of trade uncertainty starts to impact not just confidence, but actually hard spending decisions. Right now, that's not happening, but the longer this uncertainty goes on, the greater the risk is that business investment decisions start getting put on hold. And that does raise the risk that you get a recession at some point in the next year or two.
Hey, it's Glenn here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money, Money, Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.